They collected 15.1 billion in the month of June and gave to us 4.something billion. Where did 11 billion go to? They said they have a software to collect money. What is the software that I'm giving our jobs and the one deducting the money and remitting to you? What did you do? To say money for collection, money was spent in putting the software. Whose software did you put for us here? I gave Jonas Ben a job and I'm paying them money and I'm deducting it. What does it require software? I mean, look at simple fraud.
The new JTP, the National Team Registration System, is a welcome addition to the state of reform focused on making identity management and tax administration in Nigeria to the next level. With improved tax revenues, the government can begin to wean itself from over-dependence on crude earnings. It suffices to say that as an improved tax collection and tax compliance drive, it's a win-win situation for government and of course the people that we govern.
These declarations by the government of Lagos and Rivers States were fueled by the recent judgment of the Federal High Court of Port Harcourt. Besides VAT, the court also ruled that Lagos State government are not the agents of the federal government. The Federal Inland Revenue Service (FIRS) was authorized by the Nigerian Constitution to collect personal income tax on the state. Emboldened by the judgment, the governor of Rivers State, Nyesom Wike, signed into law a bill which authorizes the Rivers State government to henceforth collect value-added tax VAT and personal income tax in the state. By estimation, Nigeria generates about 1.5 trillion from VAT. If this new move by some governors falls through, the FIRS will lose about 40% of that amount, which is a substantial part of its revenue. Currently, state government gets allocation for infrastructure and expenditure from the federal coffers. Some argue that this is unfair and inequitable. States with low internally generated revenue end up getting as much as states that generate the bulk of the revenue, if not more. In the year 2020, the National Bureau of Statistics (NBS) listed Rivers State, Lagos, Kaduna, Enugu, Akwa Ibom, Kwara, Osun, Zamfara, Anambra, and Benue State as the top 10 internal revenue generating states. Value-added tax is based on consumable goods and sales. The location where activities surrounding these goods and sales are carried out is important because such geographical locations are impacted by these activities. Where federal allocation is not equitably distributed, affected states tend to suffer deplorable state of infrastructure and a strain on its socio-economic activities. The field in Lagos and Rivers State are good examples. Many believe that for equity and fairness, states with higher revenue generation should get a higher share from the federal government, or that VAT collected from each state should be fully remitted to the state 100%. The case of whether or not a state should be allowed to collect and utilize its own IGR initiated by Rivers State government is still in court. Lagos State has asked to be joined in the case, while FIRS continues to appeal the Port Harcourt legal declaration. While all these elephants fight, the common man who bears the brunt of VAT through purchase of consumables faces the possibility of double taxation and continuous depletion of his already non-existent minimum wage. It may be too early to draw conclusions on the implications of this development, as FIRS has appealed to judgment, but clearly, the move by the Rivers State government would heighten the debate on Nigeria's contentious federal system of government and the agitation for restructuring of the federation, which the ruling APC promised during its electioneering campaign.